the meanwhile, RPG Life Sciences also reported its numbers a while ago. Ajit Chouhan, MD of RPG Life Sciences, now with us. Thanks for joining us, sir. If you can first tell us what you've delivered in your Q4 numbers in terms of your revenue and also the EBITDA performance.
We've had a good year, good quarter in terms of the top line. We have grown 18% from 44.39 crores up to 52.32 crores. Okay. If we look at our PAT numbers, the net profit, we have grown 16%, up from 3.74 crores to 4.33 crores.
Okay. How did your margins do? I think for the 9 months your margins saw some pressure. They had fallen from about 17% to a little south of 16%. What would you do for the full year?
For the full year, we have had, yes, a 2% compression in the margins. It's dropped from 20% to 18%, but that's really, as we call it, an investment for the future. Our operating expenditures, we have been investing very heavily and increase in our sales force, increasing our product portfolio and new product developments, which has really led to a kind of a 4% increase in operating expenditure as percentage to sales. So at the contribution level, it is higher, but with a higher operating expenditure, the EBITDA is 2% down as percentage to sales.
Can you give us some more details about your sales breakup? How much did formulations business grow? How much did generics grow? And how much did the biotech business grow?
Yes. In terms of our APIs, it's been a star performer this year. It's grown top line of 23%. It's grown from 39 crores up to almost about 49 crores. And it has a wonderful performance in terms of PAT. From about break-evens, it has moved to a profitability of almost about 5.2 crores. So bulk drugs, through our new product launches and geographical expansion, is what we had focused in during the year. It's had a resounding result, and it's performed wonderfully well. In terms of our generics division, it's done well. It's grown 12%. The bottom line has been flat. We have sold higher into our markets of Canada as well as the European Union. Again, we are investing strongly into development of our product portfolio, and therefore you find a flat bottom line. In terms of our formulations, again, it's grown during the year at 17%. It's grown faster than the pharma market. This is a business that we have been investing very strongly in terms of increasing the field force. We have increased the field force in this year almost by about 210 people. It's now up to 550. And in terms of expansion of our product portfolio, we have launched almost 24 new products with 44 dosage forms. Okay. So that's been...
Can you give us some guidance for FY12? Will you be able to maintain the kind of run rate in terms of net profit as well as top line? Or will you do better, considering that you said that this year you've made some investments?
I do expect to grow stronger than the market. This year, as I said, top line is 15% up and bottom line is 18% up. Going further, we should be able to maintain the growth rate.
All right. Chouhan, we'll leave it at that. Thank you very much for joining us with those details on RPG Life. Meanwhile, I think in Polaris, we are still stuck with those numbers in terms of revenues, profit and margin, all of which looked very good. An 11.5% rise, 11% rise in the sales or revenues quarter on quarter, 14% rise in profit quarter on quarter, and a 200 basis point improvement in margins. That is the numbers we have for Polaris. And
some more statements coming in from Chanda Kochar. She said that she sees operating costs going up in absolute terms in FY12, and FY12 cost to income and cost to asset ratios will remain constant. Also says that she sees an average wage hike of about 12% in the next year. So some statements from Chanda Kochar. Will get that flash for you in a bit. In the meanwhile, let's take a short break then, come back and do a market check because the Nifty is trading below 5800 this morning.